All right, the 2026 union budget is just around the corner. And you know what that means? Everyone in the market is asking the same big question. What's next? Well, in the next few minutes, we're going to cut right through all that noise and break down exactly what you need to know. So here it is, the big question on every investor's mind. Are we looking at jackpots, or is it just going to be a whole lot of jitters? If history is anything to go by, we should probably buckle up, because leading up to the big announcement, the market gets, well, it gets pretty nervous and honestly kind of predictable. And here's a number that really tells the story. Negative 0.52%. That's the Nifty's average return in the week before the budget, looking back over the last 15 years. Yeah, you heard that right. It's negative. That's the pre-budget jitters in a nutshell. It's basically the entire market holding its breath. Just hoping there are no nasty surprises like a sudden change to capital gains tax or some new levy on a key industry.
Okay, so how are we going to make sense of all this? We've got a simple plan. We'll start with the big picture. Then we'll zoom in on the sectors in the spotlight. After that, we'll look at what the big brokerages are betting on, check out some top stock picks, and finally, we'll tie it all together and talk about how you can position your own portfolio.
All right, let's dive into our first section, the big picture. And the theme here seems to be discipline, not dollars. See, the word on the street from just about every expert is the same. This budget is probably going to be all about fiscal responsibility, not big splashy giveaways. And this focus on discipline really creates a clear trade-off, right? On one hand, you have this goal of long-term economic health. The government is signaling they want to get the fiscal deficit down to around 4.3% and get that debt to GDP ratio under control. But on the other hand, for us as investors, that probably means we shouldn't be holding our breath for big income tax cuts or other major populist freebies. So the takeaway here, the big signal for investors, is pretty simple. The government isn't looking for a short-term sugar rush. No, the real priority is all about building a solid foundation for sustainable, long-term growth. Okay, so if the goal is sustainable growth, the next logical question is, where are we going to see the biggest impact? And that brings us right to our second section, the sectors that are really in the spotlight. First up, we've got a theme you could call the nation builders. We're talking about defense, railways, and general infrastructure. The sectors that are basically hardwired directly into the government's long-term vision for the country. But why these sectors specifically? Well, it all comes down to one word, CapEx. That's capital expenditure. The government is expected to just keep pushing money into building up national assets. Think everything from new highways to high-speed trains. And that spending is what's going to keep these nation-building sectors buzzing. Okay, next up, let's talk about the growth engines. This theme is all about firing up India's own industrial muscle. We're talking manufacturing incentives, a big push for EVs, and, of course, building out that supercritical semiconductor and electronics ecosystem. And what's driving this? It's pretty clear. It's those big strategic initiatives like Make in India and the PLI, or Production-Linked Incentive Schemes. The whole idea is to rely less on imports and really turn India into a global manufacturing powerhouse. And our final theme here is the consumer story. This is a broad one. It covers everything from the stuff we buy every day, FMCG, to the financial sector that keeps credit flowing, and even those export-oriented sectors that might get a little boost to stay competitive on the world stage. So, we've covered the big picture and the key sectors. But what are the big guys, the major financial institutions, saying about all this? Let's jump into Section 3 and look at the brokerage bets. And honestly, the overall outlook from them is pretty bullish. I mean, look at these numbers. You've got top global brokerages calling for some serious upside for the Nifty by the end of 2026. JP Morgan is even projecting a target of 30,000. Clearly, they are all in on the India growth story. But, and this is important, it's not like they all agree on everything. Far from it. While there's this really strong consensus on financials and consumer stocks, you start to see a pretty clear divide in other areas. Just look at industrials and IT. You got some brokerages that are overweight, while others are underweight or just plain cautious. It's a healthy debate, right? Maybe about what's happening with global tech demand or the timing of our own domestic CAPEX cycle. So the key takeaway here is pretty straightforward. There's a ton of belief in the core Indian consumer and financial story. But the road ahead for IT and the heavy industry sectors, well, at least in the eyes of the experts, that path looks a whole lot less certain. Okay, this naturally brings us to the next big question. What about specific stocks? Which companies are popping up on the radars of all of these market experts ahead of the budget?
Well, it's probably no surprise that the names that keep coming up are from those core themes we just talked about. In banking and infrastructure, you're seeing the usual suspects, the big players like SBI, HDFC Bank, ICIC Bank, the cement giants Ambuja and Ultratech, and of course the engineering behemoth L&T.
And it doesn't stop there. The picks also reflect those other key themes. You've got defense majors like HAL and Bharat Electronics getting a lot of mentions. You also see names tied to consumption and mobility like Bharti Airtel, M&M, and TVS Motor, and even healthcare leaders like Apollo Hospitals popping up. All right, we've gone through the macro view, we've looked at the sectors, and we've even seen some expert picks. So now, for our final section, let's pull all of this together and talk about the big one. How do you actually position your portfolio for all this?
The core strategy that really emerges from all this analysis is actually pretty simple. It's all about aligning your portfolio with the government's own focus. That means leaning into those big themes we've been talking about: CapEx, domestic manufacturing, and that overall push for macroeconomic stability. And this really boils down to a simple 3-step plan. Step 1, diversify your assets. Don't put all your eggs in one basket. Step 2, anchor your portfolio with stable, solid, large-cap companies. And step 3, and this might be the most important one, think long-term. The real consensus here is to make your decisions based on India's fundamental growth story, not on trying to guess what's going to happen in the short term because of the budget. So there you have it. We've seen the outlook, we've broken down the key themes, and we've got a strategic playbook. It looks like the government is set on a path of fiscal discipline, and the experts are betting big on long-term growth. The stage is set. The real question is, will your portfolio be ready for the spotlight,